Hey guys, welcome back to the channel. In this video, I'll be analyzing Target stock, ticker symbol TGT. I'll be discussing their business model, current stock price, their prospects for growth in the future, and the future and safety of their dividends. At the end of the video, I'll be giving Target stock a rating from 1 to 10 from the perspective of a dividend-focused investor, so make sure you stick around to the end of the video to see that. Now in the last video, I challenged you guys to get 21 likes in the first 24 hours of the video being up on YouTube. And man, were you guys close with getting 20 likes in the first 24 hours. So, in this video, let's beat that and set the new record for this channel. Also, the channel is now well over 500 subscribers, and maybe even above 550 by the time this video comes out. In the last video, I showed that we were at 469 subscribers, and because I'm an Excel nerd, I created a compounding growth calculator through the end of the year, and if our current growth continues at the same rate, 16% per week, we will be at 20,000 subscribers by the end of the year. Now we don't actually expect that to happen, but we only have 12% of the people who watch these videos subscribed, so if we can get that number up a bit, I think we could realistically hit 5,000 subscribers by the end of the year. So if you haven't yet subscribed, please do that, and thank you to all my current subscribers who've joined along the way. Before we jump into the analysis, as always guys, please do your own research into these companies before you make any investment decisions. I'm not a registered investment advisor, and anything I say in these videos is from my own personal research and experience. And the goal of the video is to give an overview of the stock and to educate you, not to give you specific stock recommendations for your situation. Now, I'm pretty sure most of you people watching this video know about Target. They were the 8th largest retailer in the United States in 2019, behind other giants like Walmart, Amazon, Kroger, and Costco. When the company's roots were planted in 1902, they operated under the name Dayton Dry Goods Company. They grew for nearly 60 years until 1961, and then they opened up their first discount store, and shortly after renamed these discount stores to Target. In 1967, the company had its initial public offering. At that point, they started paying an annual dividend to its shareholders and has increased its quarterly dividend every year for the last 52 years. And if you've seen my last couple videos, you would know exactly what that means. Target is another dividend king. I won't go into a ton of detail about what that means in this video specifically, but make sure to check out my video on Johnson & Johnson if you want a more in-depth explanation on what that means. Target, like most other retailers, was deemed an essential business in this pandemic, and the stock price clearly reflects that. Target, like most other retailers, was deemed an essential business in this pandemic, and the stock price clearly reflects that, as they've completely rebounded from the price that they saw in mid-February before everything came crashing down. In Target's most recent earnings report, they showed that total revenues grew year over year by 11%, and digital comparable sales grew by 141% year over year. This crazy 141% increase in digital sales is much higher than the growth reported by some of their biggest competitors like Walmart, who grew digital sales at 74%, and Amazon, who grew sales at 26% year over year. Despite these growth numbers, the company's profits suffered in this last quarter. However, it's definitely more important to look at the future that a company has and not focus on its past. So, let's look at a couple advantages that Target has that really sets them apart from their competitors like Walmart and Kroger. Now, this first point I'm about to make is purely anecdotal. However, I think it's definitely worth mentioning. Target has a portion of its shoppers who are obsessed with shopping there. I personally have never been a huge fan of their stores just because I haven't lived super close to one. However, many people I know will go out of their way to go shopping at Target. I've asked a couple people why they're willing to travel much longer distances to go to Target than any other retailer, and I've heard a lot of the draw is how they sell almost everything a Walmart does, but in a much smaller, more compact store. They also mentioned that the quality of the clothes they sell is very high, so it's worth shopping there, unlike other stores with lower quality clothing like Walmart. I've had some friends that tell me that they treat a Target score almost like most people would a mall. They will just go there to walk around and see what they find. This stands out to me because when I go to a Walmart, I want to get in and get out of the store as quickly as possible. And again, I understand that this point is very subjective, but sometimes the best investments are made on characteristics that are not exactly quantifiable. And I think that the avid fan base that Target has is a huge advantage over other competitors like Walmart. And I know I briefly mentioned it earlier in the e-commerce sales growth, but Target is adapting very well to the new internet-driven economy. Not only do they offer curbside pickup after an online order, but they also own one of the biggest grocery delivery service providers in my area, Shipt. They bought the company back in 2017 for about $500 million, and it has proven to be a very, very good investment. Although Target doesn't break out Shipt numbers, their business segment that includes Shipt, order pickup, and drive up grew 278% year over year, which is incredible. Shipt doesn't just deliver groceries and essentials from Target stores, but they do in other stores as well. For example, a very large chain where I live is Meijer, and Shipt shoppers probably make up about 10% of the people in the stores at some points. So not only does Target benefit from Shipt fulfilling the orders at their stores, they also benefit on the success of other competitors, which puts them in a win-win position as a company. I know I've been comparing Target to Walmart a lot throughout this video, but I really think that they're similar in a lot of ways, but just at different scales. One of the things that sets Walmart apart from Target is their presence internationally. I remember going on trips when I was younger to other companies, and there, Walmart was there, and everybody knew that things at Walmart were cheap. In contrast, Target only operates in the United States, and I think that this is a big opportunity for them in the future if they ever decided to expand internationally. There are a couple main benefits to companies when they decide to expand internationally that Target would benefit from disproportionately to others. Obviously, the first one is access to new consumer markets. When you're operating in an environment that only contains 4% of the possible consumer base, like the United States does, you are drastically limiting the amount of revenue and profits you can generate. I won't say that the United States is saturated with stores like Target, but I don't think many people anticipate very high rates of growth. However, if they're able to move into more countries, they could continue growing very fast. International expansion also helps make the company safer through diversification. Americans don't quite always grasp this concept because for the most part, the United States has always been a business-friendly environment. However, it only takes one bad event or regime change to completely destroy a company that operates in only one country. It also means that if the United States started to struggle economically, they could supplement those losses by focusing on operations in other regions. And finally, I think expansion would allow Target to invest in companies outside of the United States in the same way that they've already invested in Shipt in the United States. Because the United States already has so many investors willing to pay up for great ideas, these ideas are usually not very cheap. However, if a company like Target moves to an environment with less competition, they will be able to make more investments at cheaper prices, and that will only help the company's growth in the future. When we take a look at their dividend, this investment opportunity looks even better. They've been paying out and growing their dividend for the last 52 consecutive years, which as previously mentioned, makes them a dividend king. Currently, they yield 2.3%, which is a little lower than I want for my portfolio average. But that's the thing about averages. Because I hold stocks that yield much higher than my goal, like AT&T and my REIT holdings, I will allow myself the opportunity to invest in companies that don't quite pay out the desired yield yet. They also have a payout ratio of 55%, which I would generally classify as a fairly conservative and safe payout ratio for a company of Target size. One thing that investors were a little scared of was a dividend cut due to the uncertainty caused by this pandemic. But Target has reassured investors that they're committed to paying a dividend by announcing this last week that they will be increasing the next quarterly dividend by 3% over last year. Now for this last quarter, it does actually give them a payout ratio of over 100%, which, if that was their long-term vision and what people expected moving forward, that dividend would not be sustainable. However, for the whole year and their projected dividend payments, they still will be having a payout ratio well under 100%. So overall, I'd say that their dividend may not be monstrous right now. However, it's a good yield, and I believe to be very safe when considering their payout ratio and their long history of increasing their payments to investors. And when I take a step back as an investor and try to formulate an opinion on Target stock, I arrive at the conclusion that they're a very solid investment option for my goals. They have a proven business model, have ample opportunity for future growth, and pay out a stable and consistent growing dividend. On a scale of 1 to 10, from my perspective as a dividend investor, I would rate Target stock as an 8 out of 10. If you guys like the video and want to see more analysis videos like this in the future, make sure to subscribe because we're growing very quickly and would love to have you here. Also, make sure to like the video so we can beat our previous like record. On the screen in a second, you'll see 2 videos recommended for you specifically, so make sure to like one of those, and I will see you guys in the next video.